Hey, welcome back to the channel, Fully Invested Fi. It's been a big week for the portfolio, and yeah, I wanted to share all the big changes that happened. As of today, February 24th, I've finally finished reinvesting all the new capital in the portfolio from both the Roth IRA transfer that I did last week and also the growth single stocks that I sold on Friday. Timing ended up being relatively good with the market dip on Monday and today. So I'll go into all the nitty gritty details of what I invested in to reduce volatility in the portfolio and kind of show you where that puts me income wise as I navigate the layoff transition period as I look for another job. So as always, you'll get radical transparency on my channel. I really try to share my real numbers more than anyone else, and yeah, nothing hidden. Everything's there for you to see. You can follow my portfolio down in the links below in the description on Snowball and can kind of follow along where that's all happening. And yeah, and if you appreciate that, please make sure to give a like and subscribe if you want to keep seeing more of this content. And as usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. Before we properly get started, I still haven't had a chance to update this. Hopefully next week. But as a refresher, here's the flowchart that I typically used when I was investing my full paycheck at my old job. So for now, yeah, as I said, this is outdated and will change, but I'll kind of talk through some of that. But yeah, this is what was happening before the layoff happened the other week. I invest 100% of my income on the channel. It used to be 10.8K every month, but now it'll be closer to 4.4K with the unemployment income. And normally I invested that both into growth and high yield ETFs, but with the layoff, I'll just be focusing on high yield ETFs for now, just to kind of keep my monthly cash flow growing. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. And yeah, that's really going to get stress tested with the layoff right now. So I use a cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal is to ideally never sell a share or take money out of the account apart from rebalancing. So I ideally want to forever compound both my growth and high yield assets and have my monthly dividends eventually exceed my monthly expenses. So if you want an in-depth breakdown of this old chart, check out this video at the top right. But otherwise, let's get started. So if we pop over to the spreadsheet, we'll see here that it's a lot lighter. A lot of new positions that have popped up here. My gross value has popped all the way to 323,000 now that everything's invested. My margin's kind of back up to what it used to be with a little bit more since I paid a bill today. Let's just dive in. Let's actually just look at Robinhood too, just to show that, yeah, this is a totally live view of everything of week's performance so far. It's been a good week so far, despite the dip that happened on Monday. So I'm up 1.41% or 2.2K. Margin buying power obviously has gone down quite a bit, as you'll notice since last time, because I invested everything. So there's my margin total at 237.5K, and then margin use at 158.7K and 78.7K of margin buying power. So 39.3K of that is actually withdrawable if I wanted to. So if we scroll through the positions here, so all the new positions there, and really like, yeah, if we pop over back to a sheet here, a couple different things that happened. You'll notice that CLSE and ORR have been added to the portfolio. So I was talking about this last week, and yeah, I ended up pulling the trigger on this just because ultimately I felt that I needed to just overall lower the volatility of the portfolio and the beta of the portfolio. So I felt like this was a good combo for that. And yeah, if we pop over to Testfolio, and honestly, I've been using this like all week to kind of like check against just different scenarios and charting stuff, right? And checking the beta. I think it gives nice numbers at a glance compared to a Portfolio Visualizer. I think Portfolio Visualizer is nice, but it just has like a lot of info that like, and most of it I don't quite use because I'm not as advanced as that. But this one kind of gives all the main stuff, which is nice. So really, what convinced me for CLSE and ORR, you can kind of see like these different combos I was considering. So this was all the single stocks, right, that I sold last week. So you can kind of see that in there in blue. It's actually the worst performing out of these, and I kept those single stocks. So yeah, ETFs all the way, right? And yeah, and then also the beta of that was kind of just under the S&P 500. So, but what I really wanted to do was kind of really reduce the beta. So I was contemplating ORR and VGT, but the beta for that is actually like 0.88. So still like kind of high. It's a little bit of a drop from where the single stocks were, but not as much as I would have wanted. The pure play would have been just ORR completely, but also I didn't want to just put all that money into ORR. So splitting that between CLSE and ORR felt like the most logical to me, just because C does long short equity plays on the US market, and ORR is, there's some in the US, but also mostly international in Japan specifically. So those comboed together actually dropped the beta for all that capital to 0.52 beta. So almost half as volatile as the S&P, right? While also kind of going up. So you can kind of see in the chart how that goes. Like in yellow, that's ORR purely, right? But in teal here, you can kind of see where CLSE and OR could be if we kind of go back to all the way back to when OR came out last year. Kind of comes in second here, apart from kind of doing OR purely. And yeah, you can kind of see that the drawdowns are a lot smaller, right? Compared to VGT or VGT and ORR or the S&P even, right? So that's what ultimately tilted me towards that, honestly. And also, yeah, go into detail about it. Someone was asking the question, what tilted me here? And I kind of gave this whole response here. So yeah, and again, shout out to Foxhound and Bankshot who kind of put OR on my radar, and as well as CLSE. And yeah, I think I just really like the global exposure from ORR, and also just particularly in Japan. And I like that also David, the fund manager, actually lived in Japan, so he can kind of see firsthand the stuff he invests in if he needs to. And yeah, just love how he was thinking about stuff from watching all his interviews. I love that he was a kind of self-taught investor and like ex-poker player. So like he just kind of sees things very differently from a typical investor, which is cool, and kind of just cool to see how he's reached alpha through that. So yeah, I showed the performance last week as far as like his hedge fund and just OR so far. So I think those kind of speak for themselves. And then CLSE was just nice to kind of get a similar long-short strategy, but on the US still focused, right? So it's pretty comparable to the S&P 500, as we can kind of see from the chart there, but it's just a lot more less volatile, which is nice. That's also one of the perks. If you join a Discord, you can kind of ask questions like that, and I post a lot more in between videos here. And that's why I did ORR and CLSE here. So went relatively heavy, like basically split that capital from the single stocks in two, between the two. And then I made buys basically yesterday and today. So we'll kind of go over all that stuff. So yeah, just the growth and high yield rebalance here. 5K yesterday went into TSPY and TDAQ from the Roth IRA transfer. And then, yeah, I split that money between CLSE and ORR. And also a very tiny buy of BTCI when my Robinhood Gold Card cashback. And then today, this morning, I took the rest of that Roth IRA money. So there was like 5K left. And I actually bought into MLPI instead of another buy of TSPY and TDAQ. And again here, one, just because I'm very tech heavy, right, in the portfolio. Like if you really like add up all my tech stuff, right, even CLSE and OR have some tech stuff, but like, let's say we ignored them for now. If you add up like all the tech stuff, like VU has like a lot of tech at this point, right? YMAX, Alti has a lot of tech. This is a lot of tech. This is a lot of tech. Yeah, that's like over 200K in tech out of the 323,000. So yeah, I wanted to start a different position there, MLPI. So just kind of investing more into the energy infrastructure. So that's Neos's new ETF. I've always heard about MLPs before, and like when I was researching like more income oriented stuff, like way before I got into high yield stuff. And I always kind of shied away from them because of the K1 and how that kind of complicated taxes. But like seems like investing in Neos's MLPI kind of sidesteps a lot of that, and you just got a normal 1099, which is nice. And this has like a 15.5% yield right now, which is nice. MLPs typically already have like a high yield, 9 to 10%. So, and they add an options overlay on top of that to kind of boost it, which is nice. So I did that, and then put the rest of the money for ORR and CLSE this morning as well too. And then also a very tiny buy of BTCI again with Ticketmaster settlement money that I got today. If you don't do that already, that was a good hot tip from Foxhound here. Yeah, if there's always tons of lawsuits and settlements going around, so definitely keep an eye out. I posted a couple that I've used in the past. Lantern over here and Levi and Korsky. This is the one that did the Ticketmaster one. But yeah, you can get like, yeah, just some $30, $60 here and there. I think some of the biggest settlement money that I've had in the past is, I think there was like $300 or something I got for something. I can't remember anymore, but a couple of years ago. But I typically just invest all of that, honestly. Just go straight into the portfolio. So yeah, these are all post and trade alerts, by the way, from the Discord. So I just, anytime I make any trades, I post them on there. And then on the high yield side, I wanted to also kind of rebalance stuff for less volatility. So a couple different things there where I wanted to cut down on the margin maintenance. So I had a couple names that were 35%, which was MSTY, and then 30%, which was WPAY, which had a lot more capital. So I really just wanted to get the portfolio down to only 25% names, just to kind of really free up any margin buffer here, right? Because this is basically just what gets affected by when you have like a lower margin maintenance, blended margin maintenance, right? So now, as you can see, my blended margin maintenance is basically 25%. The only thing that's 30% left is GOW, which also I might maybe switch for Goop from Curve, just so I can fully get 25% across the board. And maybe that's something I'll just kind of do going forward in the portfolio, honestly. Just kind of stick to 25% names, given the heavy margin usage. Like in the past, I was fine with the more volatile names and like the leverage on leverage with like WPAY and MSTY and stuff like that, given that I did have all that income coming in from the job. But now that that's changed, like I really wanted to change that up, right? So that's why. So I sold MSTY. So that was like $3,000 of capital after all that. So I sold that for a big loss for 10.3K. But if you look at the total return, really that was like a 1.7K loss if you factor in all the dividends I received from it over the last year. And with that, like MSTY had basically, for all the capital that I put in there, was basically down to like 17%. Like if we look at Snowball, or actually it's not going to be there anymore because I sold out of it, but that was down to just under 20%. So I just put it in XPay, which is pretty much 20% yield and safe with the S&P 500. And then I also sold WPAY. So the big thing with WPAY is that honestly, I was kind of curious to hold it and through a strategy change that's happening on March 20th next month, just to see how it kind of really affected things. But then again, like I think what really played against it right now is just the kind of the leverage on leverage. I'm using a lot of leverage, obviously. And yeah, I didn't want to have that extra leverage from WPAY at 25%. That's kind of adding a lot more volatility. So I kind of want to remove that and also get rid of its 30% margin maintenance. And I want to put in something similar. So 16.5K came from that. Sold that for a 6.3K loss, or 5.1K if you factor in all the dividends that I received. So we kind of see all that there. And then I put all of that into CHPY. So yeah, CHPY, I've been watching for a while from YieldMax. Obviously it's like done really well. And given that how strong the semiconductor market has been doing, and researching it more, like one thing that I do like from it is that they do hold a lot of those chip stocks. So like they hold Nvidia, hold AMD, hold ASML, right? And then they also add that options overlay. So I kind of like that they actually do hold it, and it's not just doing stuff synthetically like their other stuff, like when you do the single stock names. So I think that's probably partly what has helped bolster its performance, right? And I was kind of looking at that stuff here as well too. So this kind of what informed a little bit like where I would put stuff, and I want to check the beta and like what I'd be swapping for, right? So like MSTY, I went from something that was like 3.22 beta to XPay, which is 0.96, so slightly under the S&P 500, right? Given its income generation. And WPAY, that was at 2.12 given the leverage, and then I swapped that for CHPY, which is at 1.82. So still higher than the S&P. So obviously like I still have some volatile stuff in the portfolio, but it's a lot less than it was, right? But yeah, and a lot more comfortable because there's no leverage on that one. But yeah, the leverage comes from what I have. So yeah, that was all the changes. With all that, my portfolio gross value sitting at $323,705 if you add up all the positions, right? I'm using $158,799 of margin. And yeah, now I might realize gains like from the last several months has dipped down in the negative with all that. And yeah, that is something to keep note of. Like I was okay with rebalancing all that and realizing a bigger loss than the gains that I had, because I had basically 7K of gains to offset. So yeah, obviously this was a lot more between the 10K and the 16K. So with that, that's actually like a 9.7K loss. And really I'll be using this as carryover loss and tax loss harvesting for future tax years. So like if you're filing single, you can claim up to like a 3K loss on your stocks every year, so you can offset any gains, right? So say you have like 9K of gains, you can take up to like a 3K loss, so that's like a 12K difference, for example. So you can like 12K worth of losses to offset that 9K that you gain, for example. This loss should kind of last me quite a bit since I'm getting married this year, and we'll have to be filing married separately due to my fiance's student loan payments being based on combined income if we were to file jointly. So we don't want that, so or else it'll just jump like crazy. So I'll only get $1,500 of allowable losses per year instead of the usual $3,000, given that we're married filing separately. So yeah, that 9.7K should last me a while, unless like there's 1 year where I have quite a bit of gains, and then that I can offset that quite a bit, right? So like, yeah, like last year, for example, in 2025, so I had quite a bit of gains last year, and then I had some carryover losses from when I bought my house in 2022. So I think actually that should take care of most of that carryover loss that I was carrying over for the last few years. But yeah, that was all the changes in the portfolio. My net value now is $164,106. Paid a bill this morning, paid one of my credit card bills. So yeah, I paid this amount. So a little bit of money came out. There's only one bill left with the mortgage next week, or actually the end of this week, which I'll take out. But yeah, that's how it's looking. This is some of the bills that are coming in for next month. And yeah, that's where I'm at. And then numbers wise, where I'm at after all that. So if we pop back over to the spreadsheet here, so margin health wise, I'm sitting at $83,870 buffer. So if my portfolio hits $81,035, that would kind of trigger a margin call. So that's either a 50.86% drop if you go off just the net value of my portfolio. But really, as I mentioned all the time, like I look at the margin buffer for my gross portfolio. So basically this whole portfolio would have to drop 25.91% to hit a margin call, right? So monitoring that very closely on whether like I have to bring more cash in to lower the margin used, or potentially sell off certain positions or whatnot if ever that gets close to that. So monitoring that very closely. But right now my equity is sitting above 50% at 50.94%. So yeah, a lot lower than the 60% I was at last week after selling everything. But yeah, Gonna be keeping an eye on that, as I mentioned. Always monitoring that very closely. That's why they're in bold green here. And then yeah, my buying power is sitting at $78,781. Half of that is available for cash, available for withdrawal. And yeah, that's where the numbers are at right now too. With all those changes, my monthly income actually dropped. So that's something that I know I said last video that I was wanting to kind of raise this a bit, but I think in the end, like, reducing the volatility was more important. So even if I took a little bit of a hit here, I think that was worth it to kind of, just make things a little bit less of a roller coaster as I'm kind of in this layoff period, right? So, but still, 4.4K a month is still great for monthly dividends. If you just go off the high yield income assets, I'm actually still yielding 34.79% in distribution, which is nice. If you go off the full portfolio, I'm actually yielding 17.09%. Really, my portfolio is still yielding $25.44 an hour, which is more than Washington's minimum wage. So that's nice. If we pop over to here, so where I'm all at, so we'll kind of step down all these, right? So before my old income was 10.8K a month for my old job, right? And then right now my monthly expenses hover around 9K a month. Sometimes it can be lower, anywhere between 7 to 9K. I'm hoping to trend more towards the 7 and 8K a month after some cuts. But keep in mind that like 5K of this is fixed costs. So this is like mortgage, this is bills, like all the stuff that needs to be paid no matter what. So really, I only have like 4K of this that I can cut into and potentially kind of tweak, right? So yeah, I live in a high cost of living area near Seattle. So yeah, it's expensive out here on the West Coast. And like I mentioned, there's like 4.4K of dividend income coming in per month. And then I'll also be getting $1,152 a week from unemployment. So roughly 4.4K per month of an unemployment income. So total, that I'm getting 8.8K a month between my portfolio and unemployment, which is nice. So I'm not quite close to my salary here. I replaced a good chunk of it. So this is for the next 6 months as well, to keep in mind. But I'm pretty close to the 9K a month. And so there's a couple things that I'm thinking as far as like how I can bridge that gap, right? So really, I have like a $200 a month expenses deficit. And then if I go off my full salary, a $2,000 per month salary deficit. So after some research, one thing I did find out this week and last week was that I can bring in some side income even while unemployed. So you can only do up to 25% of your weekly unemployment income. So in my case, it's $1,152. So 25% of that is $288 roughly. So actually, I'll have to report my YouTube income, which right now is averaging about $47 a week. Hopefully, I can kind of keep growing that as I kind of post more videos every week now that I have more time. So that's roughly $188 a month. And then this week I was kind of just thinking like, how can I potentially supplement that and really just kind of really hit that cap, like really use this full amount that I'm allowed to make. So honestly, I'm not beyond potentially doing like dog walking on Rover, maybe doing Uber Eats just to supplement the income, just because I need to hit this specific number and no more, no less, right? So I think those gig economy jobs might work in that way, since I can kind of be very controlling of how much I make and what I do every day. So if you combine all that, that's $964 a month of side income potentially if I start doing this, and that would bring me to $1,152 per month of extra income. So really, if I add that to the 8.8K, that's about 9.9K of income total. If I add the dividend income, unemployment income, and then also potentially this extra income from YouTube and maybe this extra stuff that I do, right? So pretty close as far as getting close to my old income between all that, which is nice. So I have like a $900 deficit to the old salary, which is not bad, all things considered. So honestly, yeah, that's, again, I'm very, very thankful to my past self for having built out this portfolio and all the high yield income stuff to really cushion things during this layoff period. Because yeah, now I don't have to just take the first job that comes, right? I can kind of be a little bit pickier and kind of really find a job I really want to be doing while I'm well covered for the next 6 months. I think past 6 months, then that's a different story, right? That's where maybe I'll have to start making some more decisions there, where potentially I do sell off maybe portions of my growth, maybe like some gains here, and then put that into high yield income, or maybe even potentially all of growth and put into like safer yielding stuff, potentially like SPY, QQQI, TSPY, TDAQ. But yeah, we'll cross that bridge when it comes to it. But I'm kind of keeping that in the back of my mind, because if I did that, for example, right now I have 171K in growth, essentially. Like if I put that into, we just pull out a calculator here. So let's say we put it into like a blended thing of TSPY and TDAQ. So that's roughly 15.5%. That would add 26.5K of yearly income, divide by 12. So that would add 2.2K to my monthly income there, right? Which could be good. So we'll see when we get there. If hopefully I find a job before that in the next 6 months. But at least for the next 6 months, between all this, I'll be well covered. And I'll just keep updating you. I think, yeah, navigating this layoff will hopefully be beneficial, and you're kind of getting some value out of this, of seeing how I navigate this, even though I can't be investing as much as I was previously. So yeah, that's where I'm at. And that's the video pretty much. So as usual, you can kind of follow me a bunch of different ways off YouTube. There's Blossom Social, of course. Snowball, I mostly fixed a lot of the issues I was having the other week as far as just the numbers being funky. Turns out it was like a sync setting as far as like emulating transactions that I accidentally ticked and kind of messed a lot of stuff up. So I did that, and still some stuff to fix up, but it's mostly better compared to what it was. You'll notice here that I changed up my categories a bit. So I've recondensed down my high yield ETFs to just down to 2. So I have my singles and ultra in one category now. So these are ones that are yielding 30% and more. So YMAX, Ulti, NVDY, GOW, CHPY, BTCI. And yeah, if you add up all the dividends and capital gains, it's actually still positive given all the dividends. But yeah, just wanted to, honestly, a little bit of OCD. I hated having to scroll down to see the last position. So now I don't have to scroll and you can kind of see all of them. And then yeah, and also I'm just noting the percentages there just to show what's in there, right? And then the anchors, you have XPay, TSPY, TDAQ, QQQI, MLPI. So these are safer, and you can see this is actually growing even with the dividends. And then now my hedge category is a lot bigger. I'm kind of including ORR and CLSE in there, given that they're like pretty much hedge funds, and kind of doing long short equity to help dampen volatility. So those are complementing my gold position now. And yeah, my growth and div growth anchors are still there. So VU, SPMO, SCHD, QQQM. And then my growth single stocks, Take Two and Hood. Like I mentioned last time, these I'm keeping because they're still in the red. I still believe in these stocks, and not that I don't believe in the ones that I sold. That's just a reality of where I'm at with the layoff. But yeah, I just want to give these a chance to recover and then sell them for a gain. Still believe in Take Two story as far as like GTA, that's going to be a monster hit, and Hood as far as like how much I'm investing in them and seeing firsthand how they're running things. So we'll be keeping these along, letting them recover. And ideally, eventually, I'll just be all ETFs instead of any single stocks. Really, all that's left of single stocks is these guys, NVD and GEO and BTCI, if you count that as a single stock. But everything else is ETFs otherwise. And yeah, so again, all my numbers are here, all transparent for you to peruse if you want. Love looking at all that stuff, right? Seeing all my yield on cost, all that good stuff. And yeah, and then also there's my Patreon. Still need to upload last week's video, I forgot. But yeah, I tend to upload my full backlog of videos, and you can have that as a backup in case more YouTube shenanigans happens. And then, of course, there's the Discord that I've been kind of mentioning, right? So there's a lot of good conversation in between videos. I love being on here talking to people, a lot of people that are active and people that are living out of their brokerage and using different strategies. And yeah, we just have a lot of good discussions about all that. So, and I post all my trade alerts, as I mentioned. That's where I got like all my those pictures that I was using in Miro. They're all from here. So you can get a heads up on all that and get a little preview of the videos that are coming down the pipe. So yeah, join the community. We're pushing over 300 members now. So yeah, loving the little community that we're building that's open to other YouTubers, open to different strategies. The more the merrier, and everyone's welcome. So I'll catch you in the next one. If you appreciate the transparency and want to keep following my layoff journey, hit the like and subscribe, hit the bell notification to be notified about the future video. The next one will probably be on Sunday. I'm going to be busy the next couple of days. But yeah, that'll be the normal portfolio update for the week, and I'll catch you then. Peace.